There is no such thing as a risk-free investment. However, some investment types are less risky than others. In this article, we will discuss the three main types of investments and which one typically carries the least amount of risk. We will provide tips for reducing the risks associated with each type of investment. So, if you're looking for a low-risk way to grow your money, keep watching. What is the investment type that has the least amount of risk? Investment risk is the chance that an investment will lose value. It is important to understand that all investments come with some risk. However, the level of risk modifies depending on the type of investment. For example, money market funds are considered low-risk investments because they typically invest in short-term debt instruments. On the other hand, stock market investing is regarded as a higher-risk activity because the value of stocks can fluctuate significantly. The three main types of investments are cash, bonds, and stocks. Of these, cash typically has the least risk. It is because the government insures cash deposits for up to $250,000. So, if your bank goes out of business, you will not lose any money. While all investments come with some risk, cash and bonds typically have lower levels of risk than stocks. So, if you're looking for low-risk investment, these are two good options. Exchange-traded funds and mutual funds are two investment types that offer a variety of stocks and bonds in a single fund. It can help to diversify your portfolio and reduce the overall risk of your investments. Finding the least risky investment is about finding the right balance of risk and return for your individual needs. There are many ways to reduce the risks associated with each type of investment. For example, you can diversify your portfolio by investing in various asset types. If one investment loses value, your other investments may still be doing well. You can also grow your money across different investments to further reduce your risk. If you want to learn more about the other factors to consider when investing, check out our previous video. What is the importance of diversifying your investments, and how to do it effectively? Diversification is important because it allows you to spread your risk across different investments. If one of your investments loses money, you have a better chance of making up for it with your other investments. To diversify effectively, you should invest in different asset types. For example, you could invest in stocks, bonds, and cash. You could also invest in different sectors, such as healthcare, technology, and finance. What is an investment's level of risk? An investment's level of risk is its chance of losing value. The higher the risk, the greater the likelihood that an investment will lose money. However, it's important to remember that all investments come with some risk. Even cash investments can lose value if inflation goes up faster than the interest rate on the account. High-risk investments are those which are more likely to lose you money. They offer the potential for higher returns, but there is also a greater chance of losing some or all of your original investment. Medium-risk investments fall in between high and low risk. They may not grow as quickly as high-risk investments, but they also have a lower chance of losing value. Low-risk investments are those which are unlikely to lose you money. There are many types of investment options available in the market today. Cryptocurrencies are a new and exciting way to invest, but it's important that you keep your coins safe. No one likes losing money, and that's why hardware wallets are so popular. It helps protect your coins by keeping them out of the hands of those who want to steal from you. Here's a great tool that we highly suggest for storing your coins. Affiliate disclaimer: Moovmynt is supported by the people. When you purchase through links on our site, we may earn an affiliate commission that helps support our website and its content. Learn more. Ledger Wallets is a cryptocurrency wallet that has been considered one of the most reliable in use today. It provides strict safety measures to ensure nothing can compromise during transmission, making it an excellent choice. Check out Ledger Wallets now. If you want to learn more about starting an investment, check out our previous video. How can you measure an investment's potential risks and rewards before making a decision? The best way to measure an investment's potential risks and rewards is to look at its past performance. However, it is essential to remember that past performance does not guarantee future results. When considering an investment, be sure to do your research and speak with a financial advisor to get a comprehensive understanding of the risks involved. The best low-risk investments for you will depend on your circumstances and goals. However, some of the best options for low-risk investments include savings account. A savings account is a type of deposit account that typically pays interest on your deposited funds. Certificate of deposit. A certificate of deposit is a savings account offering a fixed interest rate and term. Money market account. A money market account is a type of savings account that often reimburses higher interest rates than a traditional savings account. Treasury bills. Treasury bills are short-term debt securities issued by the government that offer a guaranteed return. Corporate bonds. Corporate bonds are debt securities issued by companies to raise capital. What factors can affect the amount of risk associated with an investment type? Some factors can affect the amount of risk associated with an investment type. These include the current economic conditions, the stability of the market, and the investor's risk tolerance. Additionally, the length of time that an investment is held can also affect its level of risk. For example, short-term investments typically have less risk than long-term investments. The initial investment amount is also critical in determining an investment's risk level. Generally, the more significant the initial investment, the lower the risk. It is because there is more money to lose if the investment decreases in value. However, it's important to remember that even small investments can have a high level of risk if they're not managed properly. Low-risk investments are just like any other investment. The key is to do your investigation and understand the risks involved before you decide. Low-risk investments can offer various benefits, such as peace of mind and the potential to earn higher returns. When considering an investment, be sure to speak with a financial advisor to get a comprehensive understanding of the risks involved. Savings accounts or money market accounts are just a few of the investments that have the least risk. Which investment type typically carries the least risk for investors? The investment type that typically carries the least risk for investors is cash. Cash investments are considered low risk because the FDIC or NCUA insures them for up to $250,000 per account holder. Additionally, cash investments tend to have relatively low returns. Some tips for reducing the risks associated with each type of investment include diversifying your portfolio, investing for the long term, and understanding your risk tolerance. Additionally, working with a financial advisor can help you make informed investment decisions and choose products suitable for your individual needs. A financial institution like a bank offers different types of investments which typically have low risks. You can ask your banker which investment products the bank provides would be the best option for you, based on your target and risk tolerance. If you're looking for other ways to lessen the risk on your investment, there are also other investment options that you might be interested in. One of the best options is investing in cryptocurrencies. Cryptocurrencies tend to be more volatile than different types of investments, which means they can offer higher returns. To learn more about cryptocurrencies and how to start trading, we suggest this powerful and helpful tool for you. Affiliate disclaimer: Moovmynt is supported by the people. When you purchase through links on our site, we may earn an affiliate commission that helps support our website and its content. Learn more. TradingView is a tool that offers trading strategies and indicators for beginners and experienced traders. It's easy to use because they have everything you need to get started with investing. Check out TradingView now. To learn more about other investment options, check out our previous video. Final thoughts. So, what do you think? Which investment type typically carries the least risk? It's not as clear-cut as you might think. We hope this article has helped provide a little more insight into investments and risk. No matter which side of the fence you fall on, we can all agree that knowledge is power. And now that you're armed with this information, you can make informed decisions about where to put your money. Thank you for watching. Be sure to check back soon for more content. Disclaimer: Moovmynt provides educational content only. It should not be taken as professional financial advice.